All right, welcome back. So now we're going to walk through a new scenario, a very common scenario. You're reviewing your transactions and you see Netflix $19.99. It seems simple. You paid for a subscription, so you just simply record debit the Netflix expense account and credit cash. Or you may debit, say, subscriptions as a catch-all for all of your different subscriptions. And that seems simple, right? Well, it's actually incorrect to do that as you suspected, and that's what we will cover in this video. So here's the real question. Have you actually used the service yet? Because when you pay for Netflix, you're not paying for the past. In fact, you're paying for the future. You're prepaying for what you will use. That's a completely different scenario from accrued expenses where you pay for what you already have used. So this is what we call a prepaid expense. It means that you paid first and you consume the value later. So instead of recording an expense, you actually record an asset. So your initial entry would be to debit the prepaid expense and you would credit cash. You now own the right to future service. Now, over time, you use the service. The asset gets consumed, and just to avoid confusion, when you debited the prepaid expense, it's not an expense, it's actually an asset called prepaid expense. So at month end, what you need to do is you need to recognize the portion that you've now used. So in the case of Netflix, you'll need to know what your billing cycle is. If you pay the $19.99, let's say on the 10th, then at month end, you need to recognize the portion that you've used, which includes the 10th until the end of the month. So you'll debit the expense at that point in time for the amount that you've used, and you'll credit the prepaid expense. Now you need to be careful and think about this carefully. You need to realize that when you receive your bill, you are paying for the prepaid expense asset, and your cash is being impacted at that time. Now, you accumulate, you basically use up, okay, the portion from the time of that bill payment up till month end, and that becomes the debit to the expense for that portion. But you also have to remember that once your cash gets credited again because you make your payment, you need to realize up to that point in time the other portion of the expense that is attributed to the beginning of the month up to that payment. Essentially, you've prepaid the asset, and the asset gets used up from the time that you've bought it until month end, and then from month end until the time that you buy another one. So let's compare. Accrued expenses, you use first, then you pay later, and the liability is created in between. With the case of prepaid expenses, you pay first, you use later, and the asset is created on payment. So they're a same timing problem in that it's timing differences that create issues with recording performance. It's just that they're in the opposite direction. And if it helps you to conceptualize this, for a prepaid expense asset like Netflix, Spotify, Amazon Prime, and some others that we'll mention in a second, the whole cycle begins when you make that payment, when the cash flows. That's completely the opposite to accruals, where the entire cycle ends with that cash flow. So let's now bring this into real life. What are the common prepaid items in your budget? Oftentimes you'll have a combination of Netflix, Spotify, Amazon Prime, and so on and so forth. The number of subscriptions that exist out there are endless. For memberships, you may have gym memberships or professional memberships. And again, you're paying upfront for the usage over time. You may also have insurance. You pay for the insurance upfront. It's a prepayment, and that's independent of whether it's monthly or annually. You have to pay in advance before you start using it. So car insurance and home insurance, those both fall into the same, or tenancy insurance if you are currently renting. These are always or almost always paid in advance, okay, which means they are prepaids, they are not immediate expenses. The key point here is you're creating an asset with the outflow of cash. So if you expense everything immediately, your expenses spike when you pay and then drop to zero. And that distorts your financial performance and ultimately your net worth statement. With prepaids, you match expense to usage. Now your statements reflect reality, not the timing of cash, which is the role of the cash budget. So here's the rule. When you see a payment, ask, have I used this yet? If the answer is no, then it's a prepaid asset. You've just started another phase of transactions. If the answer is yes, then it's an expense. That one question fixes everything. So now this is where things get more interesting. In the next video, subscriptions and billing cycles, because in reality, billing dates don't line up with month end. Some of the service belongs to 1 month, as I've mentioned, and some belongs to another. So as we've done in the accruals, you'll also have to do the splitting them up in prepaids. And after that, mixed timing scenarios. And this is where a single transaction can contain a prepaid portion and an accrued portion. Prepaid expenses in closing are simple. You paid for something, but you haven't used it yet, so you don't expense it immediately. You record an asset, and then you recognize the expense over time. Again, if you haven't used it, it's not an expense. It's a future benefit.